of 23,000 perhaps on the Nifty. But it's a good time there to get in, Rohit, on the show.
All right, let's welcome him. We have Rohit Srivastava joining us now. He's founder and strategist at Indiacharts.com. Rohit, always a pleasure having you on the show. So thanks for taking the time today. You know, I remember last time when we spoke to you, things were very, very different. The mood seemed to be, you know, not quite optimistic. But ever since that state election result, I mean, even before that, actually, we'd had all-time highs on the Nifty. How do you see it now? Do you think the pitch is clear for at least the next 6 months or so till the general elections?
I think 6 months is a long shot. You're right. Things started to clear up before the general elections. The market started to anticipate some kind of an up move because we crossed an important hurdle at 19,850. So that was the point of turning positive on the market. And what we were also looking for is if we simply put a trend line of all the highs of the market, of the last 6 months. It was coming in close to 20,700. Now we've already achieved that level. So the question becomes, how much further can we really go from here on an immediate basis? And your question is really 6 months. So on a 6-month basis, I think what we really cannot do is not completely ignore a lot of the macro headwinds that have bothered us, whether they are global. A lot of them are global, except one, which I think is domestic, which relates to our own currency. That is, a little less talked about, but it's been, knocking at the doors of 83.5 for a while. So what do we do here? I think, so we've taken this as we're taking the market on a cycle to cycle, trade to trade basis from, 19,850 to 2,700 and above 2,700, we will look at it going to around 21,050. Bank Nifty is the big one because it's really trying to catch up with what the Nifty is doing, because it was the big underperforming index. It was the one that was also probably giving us a sense that there's some kind of weakness somewhere. Now that it's catching up, its top end is closer to 47,750. So that also leaves another 600 points, I think, on the table from current levels. Of course, we won't go to this next levels, one way. You should expect a 1 or 2 day kind of a reaction, especially given that you have very short-term readings on things like the relative strength index, the RSI indicator. On the hourly, it's in the 19, it's almost 94, 95 right now, which is very, very high. On the daily chart also, it's around 83. So these are extremely overbought readings. So which is why at some point of time, whether today, tomorrow, I think markets will pause, try to consolidate, and that is when we'll get a sense of that it's holding, key levels, and we have the setup for going towards 21,000. So that is what we'll watch out in the short term. On a 6-month basis, which was your core question, I think we need to be still prepared for, volatility ahead after this rally, because the macro headwinds completely not gone away.
So it's clear, Rohit, if someone is invested, they stay invested and ride the up move, at least for now. But what about for fresh investments? Since we are holding above 20,700, now 20,850, would you recommend a buy at these levels? Or, do you see, would you recommend entering in at lower levels for a fresh investment? And a breach of what level would give you the signal of some sort of a reversal in the short term, some sort of a profit taking?
So that will be much lower, at 2,700, we even dropped to 20,400, and that won't really change the overall picture that we're heading to 21,000 or so. But it does give you greater confidence when you get that kind of a pullback and you hold certain levels. And that's what we would really want to watch out for before deploying fresh investments. Right now, it is more about riding the current move. Whoever managed to get in early or get in on the secondary breakout above 19,850, those would really be booking gains or riding your existing holdings to the upside. Now, of course, we aren't seeing widespread participation. This move has mostly been about large caps, which were holding back. Mid caps had already run up a lot. So actually, you're not seeing the cash stocks moving up so much right now because it's mostly the large caps driving this move. But we aren't really seeing a major market reaction. See, what the risk I really see is, if at all you break, say, let's say 20,000, that would be a level where, the slightly broader picture would start getting questioned again. till that point of time, we'd probably look at this as just a consolidation and then a time to move higher. So that is how we consider it.
Okay, got it. Rohit, I also want your view specifically on the Nifty Bank. You know, like we were mentioning, it's been a little bit of a slow pocket for the past few months when a lot of the other pockets were really moving up fast. Yesterday, we saw that 4% kind of move on the Nifty PSU Bank. Today also, it's building on those gains. Do you think that period of underperformance has ended for the Nifty Bank and we're going to see a little bit more of a catch-up coming through now?
Yeah, it's already happening. Nifty Bank was the only index in the last few days that had not made an all-time high, and it did that all in one day yesterday. So that catch-up has started. So surely the difference that we were seeing between these two segments is getting closed with participation of stocks like ICICI Bank or to some extent even Kotak Bank, which moved after many days yesterday. But was it just a one day off? Because these stocks have moved yesterday, but they spent many days not making any major impact on the market. So you definitely want to see that momentum continue. Will it? Right now, we will try and bet on it happening unless something goes wrong. So we will anticipate that banks do, and that is private banks basically, do try to play catch up with the rest of the sector. There's been a huge lag that needs to really be closed.
Rohit, any charts which look weak where you would recommend profit booking?
So I think the PSUs and in general PSU stocks, I'm not talking of PSU banks, but PSU stocks, when you look at the PSU index, does have the signs of what we call a buying climax. It was there at the September top itself. We saw correction. And once again, we are seeing the same kind of pattern, which is very huge volume starting to show up on the way up. And that typically happens when you come to the end of a move. And so that's one place where I would want to book gains and then let it really take its time, because when you get a buying climax, often that high doesn't get surpassed for several weeks or months. And so that is something to really think about.
All right, Rohit, we leave it at that today. But thank you very much for joining us and taking us through your call on the market and where things could really be headed from a sectoral point of view as well. Thanks for joining us. But